Yes, it's true. History does not repeat itself, but it surely rhymes. And that's why it's so useful to look at what did crypto do in the past when the situation was very similar to the one we find ourselves in today. Of course, no mathematical model is perfect and nobody has a crystal ball. But there are some approaches that are useful, that worked in the past, that might continue to work in the future. Now, there are several approaches, for example, for Bitcoin. This is the Bitcoin rainbow chart. And the reason why I do not like this approximation is because the tops are not really properly aligned with one another. We have not reached the upper ceiling a single time, and the very first top didn't even reach the orange area. So I believe that the slope of this trend is too steep. There's another updated version. This looks slightly better, but again, in the bull run in 2021, we did not hit the upper ceiling. And so one more time, this model might actually overestimate the potential for Bitcoin's growth. If we were to draw the lines less steep, then the tops here would actually connect with the trend line, and then we'd see a different upper end in the channel. Over here it now says that Bitcoin could go all the way up to 500k, and I doubt that. Now here's a slightly better approach. Still, we didn't hit the top, but at least we got somewhat closer. This is the long-term power law. This comes from bitbo.io. And it gives us a fair value. It also gives us a support line that worked pretty well. We are very close to the fair value right now. We can zoom in over here and we find that the fair value according to the power law is currently at 130k. Now we are oscillating around that fair value to the upside and to the downside, and so we can build an oscillator. So that's then the purple line. We are currently slightly overvalued. We can also see that over time the tops tend to actually get lower and lower relative to the median price. In other words, the bull markets aren't as steep anymore. We tend to appreciate slower over time. Those tops tend to decline. We see the effect of declining tops in many indicators for Bitcoin. So we shouldn't necessarily expect anymore to see parabolic rallies in the future. This here is the monthly relative strength index. Now the RSI measures the momentum, as in how quickly is an asset appreciating relative to the prior trading range. And again, we see how the tops tend to rather decline with every rally. Here is the Puel multiple. So this is the revenue by the Bitcoin miners relative to the price in the last 365 days. And again, we see that with every top in Bitcoin's price rallies, the spikes tend to decline. Here's the thermocap multiple. Again, the same dynamics. And so that then begs the question, are we actually going to see a real bear market anymore in the future? Or will both the upside but also the downside be much more muted now? There is a case to be made because of the treasury companies, because of the ETFs, that price declines now get scooped up quicker. And maybe we won't fall that much anymore below the average cost basis. Have a look at 2015. Here, the current price went below the realized price by more than 20%. So the average Bitcoin investor was in losses by 20%. The realized price is just the average price at which Bitcoin moved the last time, which can be used as an approximation for the average cost basis. We've seen less of a decline relative to the realized price in 2018. So that was roughly 20%, and then even less in 2022, where the actual price only went around 30% below the realized price. Currently, the realized price is at $53,000. And so maybe we are going to hit this again, maybe we won't. But if crypto is really maturing over time, it's unlikely that we're going to go 30 or 40% below that. Here's the MVRV Z-score, so market value to realized value Z-score. We're looking at the current market cap relative to the realized market cap. So how much is currently the market in profit? And we put this into relation with the volatility. That's what Z-score means. And even though we do adjust for volatility, we still see how the peaks tend to decline with every cycle. And maybe we will never see such a massive rally anymore. Maybe in the future, we just continue to slowly creep up. If we expect that we will turn around very close to the realized price, maybe we should buy a bit earlier. Maybe we should always buy when we get closer to the short-term holder average cost basis. During a bull market, it makes sense to always buy the dip below the short-term holder realized price. We're currently extremely close to that price level. The long-term holders, the whales, they are not selling. This is the value days destroyed. So this measures what are the whales doing that tend to just hold. So when this is spiking up, then a lot of value days get destroyed. We're just measuring how many Bitcoin have been dormant, for how long have they been dormant. When they get reactivated, then this metric is going up. So when the diamond hands turn into paper hands, which tends to be when the market has rallied for quite a bit, that's potentially also a medium-term profit opportunity. We might not be at the exact tip top of a market, but at least we have seen quite a bit of appreciation in the past, like here from 16K all the way to 70K. And that's when the long-term capital takes some tips off the table. But again, currently there is no selling pressure by those long-term holding whales. What I find fascinating is that over Bitcoin's lifetime, people tend to take profit earlier and earlier. There is less and less net unrealized profit over time at the peak of a bull run. And I don't think that's very intuitive, because one might expect as Bitcoin becomes more and more of an established asset that actually the holding period tends to extend, thus the unrealized profit should also extend. But that is not what we see. Here we've got Bitcoin's price in white and the net unrealized profit in yellow. And again, we see declining tops with every bull market. And recently, when Bitcoin roughly doubled from 60K to 120K, the net unrealized profit actually went down. So people took more profit as we went up in the price. And they're taking that profit earlier and earlier. They're not waiting for unrealized profit to keep accumulating. When there is green in the portfolio, that gain gets realized, that Bitcoin gets moved. And I find this fascinating because one would expect when Bitcoin is getting held more and more by the long-term holders that this net unrealized profit should actually accumulate more and more over time. But this is not what we see in the data. We rather see how the market cools off more and more as we appreciate. And this gives me hope in the way that when there's not a lot of net unrealized profit, there's probably also not going to be a quick turnaround and a quick bear market. Because only when the market is very heated, only when there's a lot of potential profit to take, will there be quick dumps on the price. But right now, it looks like the market has matured. Profit is getting taken earlier and earlier. And so the argument goes like this. Since the rallies aren't that extreme anymore, the bear markets won't be as extreme either, because now we've got more and more purchases by entities that tend to just set and forget. They tend to just accumulate and own Bitcoin as a part, as a diversifier potentially in a portfolio. We see how the exchange traded funds are owning more and more of Bitcoin supply. So this is the number of BTC that's held by the ETFs, and this continues to go up. And that of course also helps the Bitcoin price development. The exact same thing can be said for the Bitcoin treasury companies. They tend to just buy, they very rarely sell, and so this line tends to just monotonically increase. And both of those numbers combined, of course, push up the Bitcoin price further and further. Unfortunately, there's also a counter argument, and that counter argument cannot be found in any of those charts. The problem is that fundamentally, despite different intentions, Bitcoin is still traded as a risk-on asset, as a very volatile asset that has a lot of correlation with the stock market, especially the tech stock market. When tech stocks come down, then Bitcoin comes down with it. Bitcoin is not just seen as the next gold, unfortunately. And because of that strong correlation with risk-on assets, we don't really know what will happen during a real crash in traditional finance. Have a look at the S&P 500 at the top and the Bitcoin price at the bottom. When the S&P 500 appreciates, Bitcoin tends to go up. When the S&P 500 goes down, Bitcoin tends to go down. And so the two assets, to a degree, trade in tandem with one another. When the S&P 500 bottoms out, then Bitcoin bottoms out as well. Have a look at the COVID crash. The S&P 500 dropped by more than 30%. Bitcoin dropped by more than 50%. So Bitcoin was just a levered bet on the stock market. And why is that a problem? It's a problem because all of those prior models that we just looked at in this video, they've never really seen a severe crisis in traditional finance. This here is the S&P 500 chart, so the leading stock market index relative to the US money supply. So this is the stock performance if we assume that the money supply never expands, that there's actually no devaluation of the US dollar. This here is the peak of the dot-com bubble. We subsequently saw the crash, then a recovery, and then the global financial crisis. And this vertical line over here, this is when Bitcoin was born. So Bitcoin really only has seen a bull market in stocks. And if we suddenly were to see another crash similar to .com, maybe a debt crisis in the US, or maybe the pop of the AI bubble, who knows what the black swan event will be. But if we see such a black swan event and we suddenly go down in similar manners, we don't really know what happens to Bitcoin during such a period. It's probably not going to appreciate, again, because of the correlation. And so all of those approximations that we get with those models, they're all assuming that risk on assets will continue to expand. But that's a very strong assumption given this long-term chart, right? This starts in 1960. Now you might wonder, where is the COVID crash in all of this? And the answer is here. It was this dip. This is what led to Bitcoin losing more than 50%, and it was a very quick recovery subsequently. This is not comparable to the dot-com crash or the global financial crisis. During the global financial crisis, stock prices went down by 62%. And now lever this up, maybe Bitcoin could fall by 90%. Imagine BTC trading again for $15,000. And imagine all of those fancy support lines suddenly getting broken. Then the big question is, will people still be interested in holding the asset long term? And will Bitcoin even react like this? Could it fall by that much? The answer is, we simply do not know. And that's why we have to be diversified. That's why we can't just rely on those models. That's why we also should own some gold, maybe even some US treasuries, maybe some property, etc. We simply can't know the future. Of course, buying the bottom when we are close to the realized price isn't necessarily a bad idea, but still, we can't put all our money in Bitcoin at that point. We still have to be cautious because we don't know of potential spillover effects from traditional finance, especially now that more and more Bitcoin is held by Wall Street, so by the ETFs and by the treasury companies. Now, here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment, where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now, the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest, if Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is balancer relative to the others market cap. So how is the balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to balancer. So we bet on rising prices of Bitcoin and on falling prices of balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the balancer token trade. It's going long Bitcoin, Ethereum or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I'll refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me. Because I will not just share this one trade, I will of course share every trade that I do myself as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.